Yeah, venture hustles, life is really what you make it. Building up your brand is wherever you create it. Really ain't no limit, you just gotta love it. Working day and night, it's all about the venture hustle. Hey, venture hustles, time to take it to the next level. Let's go.
Well, welcome back to the Venture Hustles podcast. I mean, let's just get on with it today. How are you doing, Jack?
We're doing good. How are you doing?
Doing fantastic. It is, middle of the week right now as we're filming this. Little bit of sunset action.
Little bit.
And
setting the tone.
Setting the tone. Yeah, we got two more. This has been a little bit of a short week because of the long weekend, but I think everyone's recovered pretty nicely. And how's your long break?
It was good. Friends, family, barbecue. How was
Nice.
yours?
You're a barbecue guy? Like you like manning the grills?
I'll man the grill if I have to.
Okay. What do you usually do?
Like I'm a big clams on the grill.
Clams on the grill. Oh, you classy dude.
It's the easiest way to cook them. You literally just throw them on the grill. When they pop, they're done. Melt some butter.
What about a little corn on the cob?
Big corn on the cob guy. Some chicken wings in there. Got have your plethora of sauces.
Plethora.
And we're good to go.
Nice. You gas grill or a coal grill guy?
Now we're getting
Wow.
prefer. It really depends. I feel like because there's a lot of people that like that like cold.
What do you
kinda.
got? What's your setup?
I got a nice gas grill. A nice gas grill. But you got the coals and stuff too. Coals like when I think of coal grill, like I'm thinking I'm camping. I'm on the beach, camping, stuff like that. Which is a good vibe. Love that kind of vibe. Nice chill vibe.
Okay.
But how was yours? How was your weekend?
Great, fantastic. It's
Love
we had a wedding this weekend.
Love that.
And you know how weddings are in our family. They're big family, big weddings, a lot of events tied up. And my nephew got married, so it's been kind of cool.
Awesome. That's cool.
Speaking of nephews, my other nephew's here behind the cams right now.
Shout out.
Shout out! He also got sauced, at ping pong. We gotta make note of that. Shout out Yusuf.
I just
What did you do? What
sauced
did you
him
do? What was the outcome?
badly. Like very bad. I would say an average player.
I mean, we gotta
I'm an
just
average
for some
player.
context. We have a ping pong table at our office here,
We
and
do.
Yusuf came in here a real broad-shouldered, heavy
Big
with a
man
lot
on
of heat.
campus kind of thing.
Right.
Like some Johnny Bravo energy.
He's like, who am I gonna take out? Who's gonna play me? And then we said, Nick, you can't beat Nick. And Nick's the ping pong pro at our office, right?
Nick's a different breed when it comes to ping pong.
Nick beat him 2 games in a row. Didn't even let him hit double digits.
No. Didn't beat him. Smoked him. Badly.
Yeah, I think a couple of minutes time dedicating, this was important to note because we're talking about valuations in this episode.
And what would your valuation be?
That's exactly right.
Yusuf?
The perfect segue is you got to be able to evaluate your skills, when you're going up for a challenge. So
Maybe even potentially evaluate the competition, what you're going up against.
very, very, very true.
Which
Very
he had miserably failed to do.
Yeah.
Unfortunately for him, fortunately for Nick and myself.
true. Yeah, we might sound like a bunch of mean people, but we're just
Well,
making
it's all
it's
good
all
fun. He's
it's all good
smiling
fun.
behind the camera.
Yeah,
he's having a couple laughs.
We're having a good time, but we kid, but today's topic, one of the things that we wanted to cover for a little bit, and it's about how do you evaluate your company or your startup, or your venture. What that means is what do you value your company at? Under what circumstances? Why is that even important? Things of that nature.
Yeah.
As I've mentioned several times in the podcast in the past, I come from a very heavy startup world.
Yes.
And the hardcore Brooklyn, New York startup scene, a Silicon Valley scene. That's where my career started almost a decade ago, and over a decade ago, really, at this point. And you come from a little bit of a startup background as well. So it's important to kind of know this is something that we always talked about. This mattered during different phases of our life cycle of our companies.
Yeah, for sure. And even now, present day, with not even with some of the brands we're building, but then also with a lot of the clients that we deal with too. You know what I mean? These are all questions that, they are asking, whether they are asking for our opinion or whether they're saying, okay, I need to know more about this. Can you educate me? Like just, what was it? Like 2 weeks ago, I went to a startup.
Yeah. You were. So Jack was this is a really cool thing. I wanna kind of put it out there. Jack was like basically repping us. He was a judge at a startup pitch competition.
Yeah.
At this whole expo thing that was happening in New York. So a lot of startups and entrepreneurs were there.
Yeah.
And all over from like Broadway all the way down to Midtown, and
it was pretty cool.
It was everywhere. How was that?
It was definitely a cool experience. Shout out Founders Live.
Nice.
That's who hosted it. But it was definitely a cool experience. I love the space, the energy.
It was the first time you were in a capacity where you were on the other side to kind of, I mean, we're on the other side all the time, but also like judging based on the value and the pitches that you hear, right?
Yeah.
How was that experience?
It was good. It was fun above all else. Always like to have fun. But it was definitely super cool, and I enjoy, kind of giving, constructive feedback and, telling them some pointers and stuff, a lot of times. Like it was a good event. This was definitely a place where if this was your first or second time doing it, it was a really good opportunity for you to kind of, sharpen the tools a little bit.
Oh.
But it was good. And this is also something that if you're in a place where you are pitching to, whether it's an angel investor or a VC, you want to have these things in there.
Yeah, there were some investors in the panel, correct? Like the judge panel.
Yeah.
That's super cool, man. I when you told me about it, I was like, yeah, you 100% got to do it, because it's like you can't replace experience, with other things. That this is something that it's such a unique little thing to have as like, hey, I did this. Super cool, man.
Yeah.
So that's actually pretty in line with what we want to talk about today.
I'd say so. And I guess with that being said, how would you best describe? I apologize. I was like kind of like a cough.
Oh, you're good.
How would you best describe what evaluation is? What is a evaluation?
I think I mean it's in the word, right? It's in its description. And it's really just like, what is your company's value and what are you evaluating it at? So if you're, let's say, an e-commerce business that doesn't have anything intellectual, like there's no intellectual property, no software, no tech that you've built, or no intellectual processes that you've built, and it's just purely an e-commerce business that is successful, then you value it at whatever your revenue is, like yearly, and whatever you're projecting, So I think the answer is a little subjective, but if you're a tech startup, the answer is completely different, right?
Yes.
And the reason why I say this is because a lot of the initial assessment on your startup or your company is purely based off of what you're capable of doing in the near future, like what you're projecting, what you're forecasting.
Yes.
And so let's say you're a tech startup and in the first 2 years you're eating dirt, right? You're literally spending 24 months building out the tech and MVP, maybe getting it ready for you to be able to go to market or raise money, right? This is where things get interesting, right? Valuation is very important at this stage because you're going to an investor and saying, hey, I want to raise $100,000 or $2 million for a seed round, right? Or a Series A or whatever, wherever you are. And they're going to say, what are you offering in return? Like, of course, there's so many different types of equity. There's debt equity. There's, straight equity deals that you could do. But whatever route you take, and let's say the valuation is based off of percentage or equity, and you say that, we'll give away 2% for $100,000. And they said, okay, we'll give you $500,000 for 10%. So then you're evaluating your company at whatever you're raising times, basically balancing that out with 100%. So if you're doing $500,000 for 10%, you're evaluating your company at $5 million. So that's purely based off of saying, that's what I believe 2% of my company is worth.
Correct.
And I believe 100% of my company is worth. And the reason why that, let's use $500,000 for 10% as a number. Reason why that can be very subjective is because in the world, in the startup world, that money is going to burn pretty fast.
Yeah.
And I've experienced it firsthand. You have to pay for payroll. You have to pay for a lot of like R&D and tech. And initially, you might not even be able to take a cut or take salary. Like you're just purely burning everything that's coming in. You're showing them a runway, and you're showing the investors that, hey, this is my 12 to 18 month plan, and this is what I'm planning on doing in the next like 18 months. My plan is to go to market fast, and I want to be able to get this out before any competitor can sniff, this space being an opportunity. And then the investor kind of starts evaluating, why are you saying that your company is going to be worth $5 million? Why are you raising it at that valuation? Then you can say, because, we're in a unique space that's untapped potential, or we're in a space and we're revolutionizing it, or you have super crazy tech that you've built a space that exists or doesn't exist. Doesn't matter. It can be a combination of many things.
Correct.
It could also be you've done a friends and family round, right? And you've raised money internally or invested money on your own.
Yep.
And whatever money that you poured in and whatever startup or company that you start in the first year has generated revenue. So you're saying that, hey, I put in $100,000 in the first year, and we saw $300,000 in revenue, right? And this is why I'm valuating it at this. We need another $900,000.
Right. So if you did the math, then
correct, and then you can kind of, so that shifts the valuation and the perspective, I would say. But the reality is, I think it's subjective to where you are in your journey, and what makes sense for you.
Yeah, I mean, I think like a good example of this would be, for those of you who are familiar with or watch Shark Tank, you see this daily when they do their pitch, show them the product, they try it, whatever it is. Like, okay, typically it's Mr. Wonderful, Kevin O'Leary. All right, John Doe, what are the numbers? What's your valuation? How much you do in sales?
Yeah.
This, that, and third. Blah, 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 blah. And here we go. You know what I mean?
A lot of times in Shark Tank, we see Mr. Wonderful ripping them apart, or the other investors as well, the other sharks, where they're basically saying that your idea is not worth what you're asking for. Your valuation doesn't make any sense. And a lot of times they'll completely shut out a product or a pitch because they've not made any sales.
You know what? The other something else I wanted to mention was, I've seen this happen on multiple occasions where the startup or company winds up losing potential investment because the valuation was just so like way off. It's it seemed like they were in like La La Land. You know what I mean? And so I think that speaks to like, this is important, you know what I mean? And this is definitely something to think about to calculate and to really like, okay.
It's super important. I could tell you nightmare stories, like personally.
Let's hear one.
So obviously, without naming any names,
of course. So
a company
Mary.
Well, it's a very personal
David.
story, so it's almost like you piece the dots a little bit. But I mean, it doesn't really matter. But for me, one of the companies that I was part of, I was I was brought on as like I wasn't the founder.
Okay.
Like I wasn't the main sole founder, but I was a co-founder.
Sure.
If that makes any sense. I came on pretty early on and, developed a lot of the tech, and that was my responsibility.
Okay.
When we raised money from investors, one of the biggest things was valuation. And the reason why was because, I think the first rounds that we raised was $250,000, something like that, maybe $300,000.
Okay.
That was one of the first rounds that we raised.
Okay.
And it was, man, I forget what valuation it was at, but it was, I think it was like 7 or 8, maybe $10 million valuation.
Okay.
Like very little percentage, right?
Okay.
For it to be like something like that. Again, the numbers are a little hazy to me.
It's
okay. It's a really long time
estimates.
ago.
It's okay.
And it wasn't my first startup. So what I could tell you was we ran into problems because when the company started running out of money, we needed to raise more money, right? The founders need to raise more money, and we had more investors lined up, more VCs. Okay. And we were pitching the VCs at a different valuation than what we raised money with the previous VCs from. Does that make sense?
It does. So now the question is, why did the valuation change?
Drop.
Why did it go down?
Why did it go down? And why? And then we had another problem was the first investors were pissed off. They were like, why did I come in at such a high valuation?
Right.
We need a jab at this, right? And then we had X limited amount of equity.
Now you're in a pickle.
Now
you're in a pickle.
So there are a lot of bad stories and also a lot of things that things that you want to avoid and you want to be able to establish early on. Because that's really, really important. I think it's really important as a startup to determine how much you're willing to give away. So let's say me and you created a company and let's say it's a tech company and I think we need to know like, are we 40-40? Are we 30-60? Are we having 10, 20, 30% or 5% unallocated for investment? At what point does that change, right?
Correct.
Because it gets complicated.
Right.
But I could tell you that that's pretty important because then you can start figuring out what valuation you'd raise money at, right? In the beginning, at least the pre-money valuation can be different, but it could get confusing, right? Because we didn't do it the conventional route, and it caused a lot of problems. And then this company was also did a lot of different investment rounds. So it got pretty complicated. It was this very, very great idea. It was a successful business model and idea. It was completely in an untapped market, and it changed ideally the landscape of a lot of the things that we were doing at that time.
Yeah, I mean, and as a quick U-turn, very, very, very quickly.
Yeah.
When you just start to discuss with the percentages and things of that nature.
Yeah.
What Saj is really talking about here is what's called like a cap table, right?
Yeah.
For those of you who don't know what that is, a quick summary might be, it's pretty much whether it's an Excel spreadsheet or whatever kind of format, it's pretty much, okay, Saj, X, Jack, X, Johnny, X, and then, percent to give away, so it's on paper, it's organized, it's saved, so that later down the road, there's no he said, she said, I thought this, you thought that. So just a little,
I would say,
clarification there.
It costs, it doesn't cost a lot to get started. When you get started, it's, I can register an LLC or a C Corp or an S Corp for a couple $100, but you won't. You won't believe how far it goes to have a proper team or a proper legal team to properly tell you how many whether you need 1 million shares in total pool or you need 10 million or 100 million, what the breakdown's going to look like in the initial paperwork, who's going to be on that, and then also preparing paperwork for newer founders that come on board, and then what you said is perfectly in line with that, which is the cap table needs to reflect that.
Well, yeah, and then, obviously also something to keep in mind is depending on what kind of industry and you're kind of trying to put yourself in. I mean, you don't want to go to a tech lawyer for the tech space, right? And you want to be able to, seek out whatever kind of lawyer that, depending on the industry, you want to get a lawyer that is familiar with that industry. You know what I mean? So that everything makes sense is ideal for kind of what you want to do, you know?
I agree.
So now, what kind of things affect a valuation? What do you think?
I think many factors affect the valuation of your company. Some of the things I mentioned already, which is, have you made any revenue, and how much money have you already burnt?
Okay.
What's the forecast? It depends on, again, what stage you're at, right?
Okay.
Like, if you're a typical company, and your goal is to get, let's say you're a professional service company and your goal is to get to an exit, your route that you need to take towards that would be different, right? So I would say there are a lot of different factors that matter, but also definitely the biggest ones are revenue, intellectual property, how early you are in the space, how far ahead are you from your competitors?
That's a good one.
And just a couple of things that matter. Although some of these things would be a little difficult to outline in a pitch deck, but or a business plan. But I could tell you that these things are pretty important. there's so many different scenarios that I would love to kind of drop some information on. But
You have some knowledge bombs.
yeah, just from experience. Also, the landscape has changed, man. When we're on the other
very true.
we're on the other side now, where we deal with a lot of startups on a daily basis, and we're a professional services company at Final Few Productions, and we deal with businesses and startups that have raised money, that are raising money, and
That are using the tech to raise money.
correct.
Everything.
Yeah, and it's very different to see the landscape now. But although some of the things I can tell you that are noticeable in change and that were changing when I was very heavily in that space, was some of the factors I would say is definitely revenue. And this is more of a question from an investor standpoint. When they're looking to invest into your company, they care. I mean, everybody cares. Every investor cares about like
Money.
ROI.
I mean, of course.
And the biggest thing that I know that when I'm looking to invest into anything, whether it's a startup or an idea or anything like that, that's pretty important to me. But also, like, I tend to look past
Just the numbers.
because I love the startup hustle and the grind, and being part of something that's very innovative and unique that hasn't been done before.
Yeah.
And that's so rare, man. In 2022, holy shit, is it rare? Like, it's not. I don't think it's a common thing at all. Like, we don't see that many unicorns. And in Silicon Valley term, we know what unicorns are.
I mean, I don't know, because as new industries, kind of formulate, or as industries, the tech and industries start to grow stale, that's when you start to see unicorns. I mean, think about the blockchain space, the Web3 space. There's, some out there, some you may know of, some you may not.
Yeah.
Some haven't even been born yet, which is cool.
Yeah. I would say that one of the things, I mean, if you're on the other side and your goal is, I think it's important, and we touched on this before, I think one of the first couple episodes, when we're in like episode 17 now, like we've done a lot, right? We've been around for a couple months. But I think in one of the first couple of episodes we talked about this is like, I think it's important to identify what your goal is.
Of starting the company?
When you're starting the company. Like, if your goal is to, and you've asked this tons of times for me is like, hey, like, would you plan on selling like Final Few Productions? Like, would you exit? And I told you my answer for that, right? But like the reality is, I think it's really important for you to identify what your number would be. Identify what your goal is. And when I say what your number would be, I think it's really important to know, like, is my goal to take over, let's say if I'm creating the next TikTok, right? Which is like a video social media sharing platform.
Yeah.
My goal to take over that space, continue to innovate, or create something unique enough and build an audience big enough for me to be able to exit, sell, and move on to the next venture.
Correct.
Like what is my goal? Like, do I see a vision within that avenue?
Right. Is this your passion maybe?
Right.
Or is this...
Correct. Like, for me to keep innovating or for me to take it to the next level.
Right.
I can tell you that the people behind TikTok, I 1,000% I can put money on this. That I don't think that was their goal. I think they definitely landed something that was innovative within their algorithm. But
Okay.
I mean, just using that example, and I think the goal is very much always an exit for companies like that when the tech is not that innovative.
Right.
It's not like we haven't seen it around, And I say this because think about what happened to House Party. Remember House Party, the app?
I think so, very briefly. I don't really think I used it that much.
So if you don't remember, it's like had these little rooms. People can kind of come in, like group videos, and you know what I mean? That's just like Twitter adopted the Twitter Spaces thing. Clubhouse. But and House Party went through multiple rounds of funding. And what I could tell you is it's important to identify, again, like, had they exited, I don't know if they actually exited, but let's say they did, good on them.
Yeah.
But
they didn't.
Right.
Kind of missed the boat a little bit, huh?
Yeah. I think so. But also, man, it's such a dangerous world to be in, right? Because if you've got a really good idea, you can't patent ideas.
The biscuit. Yeah. You gotta risk it for the biscuit.
You got to be a different breed to be constantly innovating within a very highly competitive tech space. But I think it's important. I think circling back to what I was saying, is important to value, figure out what your goal is and what your targets are, and then plan accordingly. And then
Well, yeah, I mean, and that goes without saying, right? Like you can't reach your goals if you don't know what it is, right? And you certainly can't build a successful plan if you don't know what the destination is, right? And that goes for, obviously what we're talking about and everything else. You know what I mean? Like you reverse engineer it. You have to.
Yeah, and I think it's I think it might change. Things might change as you go, and that's fine. But having no end goal and just riding off of like a hype idea that, oh man, this is going to be huge, but not knowing what you're planning on doing with it, if everything goes according to plan, I think would always, I don't think it helps that much. But
yeah, I mean, at the end of the day, you have to have a good plan, but I guess with that said, is there anything that you think we missed in regards to whether it's someone that wants to place the valuation on their startup, getting to a place where they're pitching somebody, anything that we've kind of missed in this?
I would say how, like, if you want to think about like, all right, how can I increase my valuation, right? Or increase the company's value. And that's always like something good to think about. Like, how can I make sure that my intellectual property and what we're offering is airtight,
That's true.
I would just say that if you're in any capacity to be able to get some sort of proof of concept, whether that's, for us, it was an event we're an event ticketing company. So when we showed metrics like the number of tickets sold through our platform, that was a huge metric. It didn't matter how much we moved. And investors love that when we were raising money. So, or if you're, let's say you're not in a realm where there's any possibility for you to show some sort of metrics, which is very, very possible.
Yes.
Then I would say that do anything and everything to bolster your intellectual property. Even though you cannot copyright and patent ideas, what you can do is you can bolster it and try to strengthen it. Try to be eons ahead of your competition by predicting what you will need. Try to start doing your R&D ahead of time. Don't wait for the pivot. Be the pivot.
Ooh. You want to run that one back?
No. Why? Does it sound weird?
No, it sounded fire. That's what I'm saying. Like, run that back.
Mic drop.
Love that. I think those are some good things to think about. What are some of your closing thoughts about this?
That's it for me, man.
Okay.
What about you? I'm sorry if I babbled a lot on this.
No, you're good. I think that I like everything that you said. And like for me, the number, like when you are like, so what I'll say is when you're pitching somebody, right? You have the pitch deck or whatever the case may be. You always want to be showing some of like what makes you different, what makes you unique, and then why. Why should I or whoever invest in this company? And then what are you going to do with the money, right? Sometimes people forget that, right? You want $1 million. Okay, what are you going to do with it? It's like, I'm just going to give you $1 million and then what? I'm supposed to, not to say trust is a thing, but I'm supposed to trust you with it? Like, what do you mean, right? And people like to see, okay, 100,000 is going here. 350 is going here. The remaining is going to go here.
I was talking to one of my my relatives. It's kind of like a cousin, brother-in-law.
Sure.
In my family. My family's pretty tight like that.
But cousin, brother-in-law. I never heard of that one.
Yeah,
So.
I don't know how else to explain it. He used to work for Apple before.
Oh, nice.
And when Steve Jobs was alive, he worked kind of directly pretty close.
Oh, wow. That's pretty cool.
So what I could tell you is we talked about this, and he was like, man, because he keeps a very close eye on the landscape of the startup scene. Okay. This is how we kind of got close as well.
Nice. Okay.
And he said that, and I didn't really even think about this, and I had to do a little bit of research, and he said something like the amount of money being poured into startups that are being absolutely wasted and burnt because the risk the investors are putting in this economy and space right now is really, really bad. And so we're starting to see a shift in that a little bit.
What do you mean?
Like investors invest a lot of money on a hunch.
No, I'm saying, what's the shift? Like they are
Shift.
not
They're being a lot more
conservative?
careful, significantly
Okay,
more
got it.
conservative. I mean,
Okay.
this trend has always been there.
Yeah.
But I mean, we're in a completely different landscape and economy right now.
I mean, yeah, especially right now, for
Mhm.
sure. I mean, that makes sense. You know
Yeah.
what I mean? That makes sense.
Yeah.
But yeah, I think that would probably be, some of my thoughts, and
I think
definitely.
it's good thoughts.
Thanks.
I think what you said about the writing down, I'm glad you brought that point up. Like sometimes me and you are very visual guys. When we have high level creative meetings, we like to do our little whiteboard sessions. As archaic and old school that sounds, like we do this, right?
Yeah, well, I mean, depending on,
Sometimes it's important. The reason why I say this is like, sorry, not to cut you off.
You good?
The reason why I was saying this is because when you say this and when you're looking at, let's say, doing like a pros and cons of like what makes you different, what is your intellectual property? When you look at this and you're like, because you're so engulfed in it, sometimes you need to take a 30,000 foot view.
Mhm.
You start to realize that, oh man, I got work to do.
Yes. Yeah,
That's what I meant by when I said bolster.
Yeah, I mean, it's always good to have a bird's eye view, 100%. And like you mentioned, I mean, sometimes it's hard when you're in you're in it. You know what I mean? And I mean, depending on what you're doing, what you're talking about, what kind of problems you're trying to fix. I mean, seeing it visually can make all the difference.
Oh yeah.
You know what I mean? Like,
Oh yeah.
no matter how well you explain it, especially if it's a layered problem or an issue. I mean, there's no other way. But yeah, I think that would, I think that pretty much wraps this up, without kind of
For sure.
going crazy on it.
Yeah.
If anyone has any questions, comments, definitely leave them in the comments or shoot us a DM on Instagram. We're like pretty active. And I guess with that being said, we appreciate you all that are tuning in. We are available on Apple, iTunes, Google, Spotify. If you're looking at me,
TikTok.
we're on YouTube, TikTok, and sub, share with a friend, follow, and
Do it all.
do it all. And no matter where you are, hope you are enjoying the day and or night, and we'll see you next time.
See you next time.
Venture hustles, this is venture hustles. Turn nothing to something, start a business, get it jumping. Ay, told myself that I would make it and I'm never quitting. Staying motivated and I started with a vision. Yeah, venture hustles, life is really what you make it. Building up your brand is whatever you create it. Really ain't no limit, you just gotta love it. Working day and night, it's all about the venture hustle. Ay, venture hustles, time to take it to the next level. Let's go.